Hey everybody, welcome to my first journal entry for 2016. It's January 9th, this Saturday morning, and going to look back at my trading performance over the past week and look to see what I need to improve on as we get ready to open what I assume will be a very interesting week on Monday. Obviously, to start the year off from a market perspective with the worst first week ever. You don't get many evers in this business. Flash crash was an ever. This is an ever. So extreme times actually provides us with opportunities, and we still have ammo in the cannon. So I guess what I need to be doing and what I will be doing today, really more tomorrow afternoon and evening, is mentally prepare for Monday, get all my ducks lined up to see if I can really get my mind and body, yes, my body as well, aligned with the market. It may sound like a silly concept, but I've been doing this for too long not to know that. I think I tweeted this earlier in the week that I view this game as a business of rhythm, pure and simple. And when you're in rhythm, as I said earlier in the week, it's a wonderful place to be. And when you're out of rhythm, sometimes it feels like hell. It feels like there's no worse place. And that switch can get flipped so very quickly to being in and out of rhythm. And so what I know I need to do is again mentally prepare myself to align with the markets. I've often said it's like a cheek-to-cheek dance, and I probably should clarify for some of the newer folks and remind myself in terms of how I trade. I posted a chart showing all my executions a couple of days ago, and some of you may be looking at this saying, "Oh my goodness, this guy is a hyperactive trader, this and that." And really that's not the truth because yes, I do have an account where I tend to scalp more than not, but it's a more of an issue of if I'm in rhythm and I am fully aligned with the markets, then as it goes up, I want to be going up. As it comes down, I want to be coming down with it. And I don't know about you folks, but I don't always find myself. Uh, well, I never find myself always, if that sounds crazy, in that position. I guess another way to say it is rarely am I completely in sync. But when I am completely in sync, then I do want to be aligning. And so if you looked at the plots for my trades over the course of the day, you'll see a lot of stuff like that. And you may see a lot of that stuff like that until I get out of rhythm, and then I've got to stop, slow down, and change gears a little bit. But I've often said that if they're handing out free donuts, then you take it. If you're a basketball player and the defense is just letting down and letting you drive to the hoop all the time, I mean, you got to drive to the hoop, and you got to drive to the hoop again. You got to drive to the hoop again because there's no defense. And as frustrating and as difficult as this business can be, at times it's that easy if you've honed your skills to recognize when the defense is down and the layups are there. So whether it's donuts or layups or whatever crazy analogy we want to use, I guess what I try to do and what I want to remind myself of right now is am I in rhythm with the markets? I was not in rhythm the first couple of days of the week. I was in very solid rhythm Wednesday, Thursday, and I was not in particularly good rhythm yesterday. And so what I need to do is, first of all, recognize why that is. And it reminds me a little bit, not a whole lot, but a little bit of October, was it 2008, where the whole world was getting adjusted to higher VIX, record high VIX, another ever, right? We're at 60, 70. And so obviously as a discretionary trader, when you're first coming across an ever, there's going to be a draw. And then once you figure out what's happening, it's like, oh yes. And the key is to try to get that aha triggered as soon as possible. And so that's what I've got to do as I prepare for this week, is look to see what the market is doing. I have to remind myself, as I am documenting my diary and those looking over my shoulder, that in cases of extreme markets, I will most often take the other side and wait for those opportunities, because for me it's much easier to predict a snapback than it is for a market to continue to get further extreme. And will that incur some stops initially or scratches as you try to position? Yes, but more importantly, maybe size management. Lighter sizes as you're probing, and then adding the sizes as you're getting the confirms or getting more extreme. I say that very, very carefully because, you know, all the talk and logic about doubling down and ignoring your stops. I posted something this week on Twitter. It said, you know, from the airplane series, you know, good week to quit using stops or breaking trading rules, in tongue in cheek, of course. But obviously, this business is all about risk management. But it is about risk management with the first part of that equation or sentence, risk. We accept risk. We accept risk. Certainly every day we get out of bed and step off the sidewalk, but we accept risk every moment in this business. And where there's risk, there's reward. And the larger the risk, manage risk, if you will, the greater the reward. So, you know, I am a contra trend trader. I think I had some time Thursday night. I often can't do this during the day because of schedule and focus, but at night when the China news, was it Shanghai index reopened and we get that artificial pop, you know, I had some fun tweeting about it because, I mean, it was, to me, it was fun. It was clear. Market in a huge downtrend, you know, brick walls all over the place, all sorts of overhead supply. And what's the market going to do once it first pops up? And so that's an example of a fade. What was it? It was a Thursday. I'm looking at my charts here. Thursday morning, going long the open. You know, yesterday midday going long, the favorite midday plunge, right? You know, at that rate, the market will be zero by 2 o'clock. That ain't going to happen. There's plenty of day in the market and plenty of time left in the day to recover. And so I will take that trade every day and be right once. I'll be right 9 times out of 10, and I'll take the hit, take the draw when it's not. So that's what I'm trying to remind myself as I do this is that that's the type of trader I am. It would be wonderful for me for Monday for all the news media outlets and everybody to start talking about crashes and this and that, and maybe we'll get a bonus and open limit down like we did. What was it? The late summer, fall of this year. Reminder what happened when that did occur, which was, you know, the market opened down 1,000 points. The Dow did, and recovered almost all of that in in a very short period. So anyway, I'm not suggesting how you trade or talk to you about how you're trading. I'm just reminding myself that I've got to be mentally geared up and prepared, and remind myself of where I make my keep and aligning with the market. So, as I say, buy when there's blood, but certainly either wait for the night to fall or have a glove or two on for protection. So again, I open the year out of rhythm, in rhythm, out of rhythm, and for me, it's about pushing and maximizing what I am. I will say that my most positive 2 days, and actually in quite some time, Wednesday, Thursday, reflected the rhythm and reflected a little bit better size management. And the good things about Monday, Tuesday, Friday is that the sizes were down a bit. So the gains of Wednesday, Thursday exceeded the draws or modest income of the other 3 days, inappropriately so. So that tells me my sizing is good. And if I just follow that recipe throughout the course of this coming week and the year and the rest of my trading career, then all is good. So, you know, it's, you know, minimizing losses, maximizing gains, whether that's in a trade sequence, whether that's over the course of a day, week, month, year. That's what this is all about. So that's what I'm looking at. I'm not going to talk about chart patterns. It's not my thing to do here. Again, I want to you know, mentally document and prepare for myself as we come into the next week, in terms of what's going on and just reacting and just going with it. I tend to be in a decent situation. The yips of late last year have disappeared. Just going to stay in rhythm and just going to shooting at the hoop. That's all I can do is keep shooting at the hoop, and let time, sample size, and hopefully 20 years of experience just continue to do its job. So, but you know, I got to be on my game. So that's kind of my thoughts heading in the year. Just a real quick comment on any trader training I'm going to be doing, and to clarify a couple of things for those who be new. I'm a trader first and foremost. I taught in the late 90s, early 2000s because I was asked to. I got back into it in the late 2000s with a jelly training program because, again, some folks, well, two reasons. Some folks asked me to do it, and secondly, I was complaining a little bit too much about the lack of what I thought was good education, tried to do something about it. But I will be clear, it is not intended to turn anyone into a magical trader. It's not intended to provide any promises other than agreeing to spend a solid quality week of my life with you. And really that's what it's all about. And you can look at the feedback from prior efforts, for what it is or isn't. So, if folks are interested in doing that, I can do it in February. I can do it later in the year. I really don't care. I care about education. I care about trying to provide something I wish I had earlier in my life, but continue from day one with the mantra of it is not a panacea. It's about realism and transparency and nothing more than that. I think I've got a few things that that can help. But again, that's totally up to you. So if there's interest, please, again, email me. I do not do mass emails. I do not. I'm not even probably going to mention this on Twitter. And it's a silly business plan. But if I wanted to pack people in a room and do this sort of thing and send out multiple emails, I could. But I choose not to. I choose to work with a very small, finite group of people so that we can really get into this in some detail. So if there's interest, that's great. If there's not, I'm okay with that too. We've done how many? 13 so far, I think. But again, I leave you that with that very important caveat. There's lots of good training sessions out there. Get some quality education. Try to minimize the cost of on-the-job learning. Don't be as stubborn as I have been and continue to be at times and spending too much tuition in the markets. So just be smart about this. Be smart about this coming week. Be protected, but go for the opportunity if you feel it's there. Manage your risk appropriately. Out of breath. That's what I've got. Have a great weekend. Have a great trading week next week. Take care. Bye.